Everything you need to know about sports cards and taxes right now. Hey guys, my name is Tyler Short, and I want to review everything that you need to know about taxes because there have been some major changes taking place going into 2023 that everyone should be made aware of. In addition to that, not a lot of material out there exists about what you should be doing in terms of making sure that you are paying the least amount of taxes legally as possible as it relates to your hobby or sports card related income. So a couple of things that I definitely want to touch on first. And I have a board here, so I'm going to be reading directly from it. No editing, no clips whatsoever. One caveat that I will mention, I'm not an expert. I'm a pharmacist. I'm not a CPA or an accountant. There is one YouTube channel that I highly encourage everyone check out and add it to your feed. It's a gentleman named Clear Value Tax. Does incredible content. It's very surface level, so you're going to have to dig into the weeds a little bit more as his videos are relatively short. But definitely recommend checking out his content, but you definitely need to take responsibility in terms of understanding what this content means and also relying on some professionals to give you some advice for your specific situation. So a couple major points that obviously everyone has heard about is the new changes as it relates to the 1099K reporting threshold. So the big news in 2022 is that, well, 2021 actually, is that as a result of the 2021 American Rescue Plan, there are new IRS reporting thresholds. So previously, the IRS reporting thresholds for a 1099K form was $20,000 transacted and 200 transaction within a calendar year. So you had to have both of those criteria meeting in order to trigger that third-party payment processor to issue you a 1099K and also the IRS a 1099K. That's essentially what that 1099K is doing is it's alerting the IRS, hey, this person has been paid out $20,000 or more in income. This is income that needs to be reported to the IRS. At this point, you know about it, IRS, so you deal with this gentleman who made all of that revenue. So, as a result of that bill, again, under Joe Biden, the reporting thresholds were dropped from $20,000 and 200 transactions down to $600. And that was supposed to take effect January 1 of 2023, meaning that for tax filing season for the year 2023, meaning by the time that we do our taxes next year, we would actually be subjugated to that new threshold. Well, as of December 23rd, 2022, we all got a little bit of a break in that the IRS announced the delay of this lowering of the thresholds, meaning that they're not going to be implementing that $600 threshold. It is still going to be maintaining at $20,000 and 200 transactions. So we all have a nice sigh of relief. But a lot of people may not necessarily know what a 1099K is because that thing is not going away, and I get them. And I have gotten them previously, and because you get them, it's not a bad thing. I want to explain exactly what a 1099K is. So 1099K form was created, and the original intent of this was to increase transparency and make auditing a business easier for not reporting income. Something that definitely happens in the sports card hobby is people not reporting income from their hobby or side hustle related businesses, right? So that also extended to the rest of the business world. They wanted to make sure that if we issue out a 1099K form, if someone has an online business through eBay or Amazon or Shopify, etc., that if payments are being processed back out to that seller and being remitted by PayPal or Cash App, etc., that income is being reported. So that's where these thresholds originally came from, and it came through the form 1099K. So what is that form 1099K? It is a form used to report income from payment processors. And again, it came from that Small Business and Jobs Act of 2010. So in essence, the real root of this 1099K is to make sure that you're not hiding your money, that the government knows about it, and then if you do have income, it is your obligation to report it. Now, just because you don't get a 1099-K does not mean that you're not supposed to report your income. You're supposed to report all of that income, especially if you are intending on making a profit. So anyone who is making sports card sales and profiting off of that, that is something that you can't just rely on a 1099-K to show up at your door in order to pay tax on that. You still have a tax obligation. Now, it's up to you on whether or not you're actually going to report that, or if you're going to let the IRS find out about that and then go after you. But the 1099-K makes it a lot clearer, and if you do get a 1099-K, do not ignore it. Do not ignore it, because the IRS knows that you have it, because they see it, and if you don't do anything with it, and if it's not something that you are addressing in your tax return, it is an immediate trigger for an audit. At least from all the material that I am reading, it is a red flag. So do not ignore it, do not throw it away, do not dismiss it. It is something you need to pay attention to. So we've talked about 1099-Ks, we've talked about the history, we've talked about we're getting a breather in the reporting thresholds, but still we haven't connected the dots to sports cards and really what you should be doing to minimize your tax going into 2023 and beyond. So first and most importantly, if you get a 1099-K, and let's say that 1099-K says that you sold $50,000 on eBay, all paid out via PayPal, etc., does that mean that you have to pay taxes on $50,000? No, with a caveat. So the majority of people who are involved in sports cards, whether you're flipping, etc., for the most part, you want to make profit on this. So if you do have a business, regardless if it is a legitimately recognized business through the IRS, meaning it's incorporated, S Corp, LLC, etc., versus no business entity whatsoever, the intent matters. So if you have an intent to make a profit, then there are certain deductions that you can use to lower your overall taxable income. So let's say that you sold, again, $50,000 that year, but you spent $30,000 on cards, and then you also spent a couple $100 in supplies, and then you also spent a couple $100 in shipping, et cetera, et cetera. All of those things are legitimate business deductions if you are intending on making a profit. If you're not intending on making a profit and you're just operating this as a hobby, if the IRS views this as a hobby, then you cannot make those deductions, and you would have to pay taxes on the income for all $50,000. Now, how that is taxed, again, we all receive a W-2 paycheck for the most part. Not all of us, but let's assume that you do, as the majority of people are W-2 employees. You know, you work for your company, and at the end of the year, you get your W-2 forms in the place that you work, and it shows that you made $100,000 that year. Well, if I made $100,000 at my job, and then I also have this IRS 1099-K form for which I need to report that says $50,000 on it, but I sold $30,000 in cards, essentially what I'm going to have to do is pay tax on that margin or that profit, that net income being $20,000, because $50,000 minus $30,000 in expenses is $20,000, so you pay tax on that $20,000. What they do is they will typically add that $20,000 on top of your W-2 income, so it's almost as if instead of making $100,000 for your company, you're making $120,000, and thus you get taxed at that. Now, more than likely that means that you have to pay in tax because your employer is withdrawing your tax on your $100,000 salary, making sure that that is balancing out. But you haven't been paying in, for the most part, for the hobby-related activities where you're making a profit on cards, right? So more than likely, you're going to get hit with a tax obligation where you're going to have to pay in money. So what is it that people are not doing today that they should be doing? First and foremost, you have to be keeping receipts of every single thing that you buy. Now, if you are buying things online, it is relatively easy to do that because we have PayPal report outs, we have eBay report outs that aren't as sufficient, but PayPal report outs that literally itemize every single thing that you are buying so that you can then hand over, this is the proof of what I am paying for the cards that I'm buying. In addition to that, I highly recommend that everyone here keep an Excel spreadsheet documenting every single item that you purchased, when you bought it, itemized to the nth degree, Because when you begin selling and mixing the years of buying cards in 2021, not selling them later until 2023, 2024, etc., your inventory levels and your inventory cost of goods sold by year is going to vary considerably. If you followed my channel, I've busted out my Excel spreadsheets, and this is how I keep track of this. I have everything itemized to a T to the card by year, and I have data showing when I sold, what I paid for it, when I sold it, and I can keep a running inventory by year and an aggregate of everything that I paid for. If you do not have proof of cost of goods sold or proof of the expense, then you cannot use that as a deduction, and thus your tax obligation is going to be what you sold your entire card for. So if you sold $50,000 and you don't have receipts for the cards, expense that you paid for those, or even the grading forms of the expense for grading the cards, or the shipping receipts from taking it to the post office, then you cannot use those deductions. This also goes into cash deals. Now, this isn't to say that you can't do cash, but if you are paying cash for cards, especially at card shows, and you're not getting a receipt, absolute no-no. You should not be paying cash for anything without getting a receipt. Now, it doesn't mean that you can't pay cash, but how else are you going to document and show the IRS that you paid $500 for a specific card that you later sold for $1,000? If you do not have documentation that you purchased that card for $500 and then later sold it for $1,000, your entire tax obligation is going to be on $1,000, not on the profit that you made on that card or the net income. So these are all small little tricks that you need to be paying attention to, and you need to be implementing immediately if you are not doing so now. Now, again, I'm not giving any advice on how to avoid tax liability and tax obligation in an illegal way. I will absolutely not do that. Do not message down in the comments requesting that. As always, I do recommend that you speak to an accountant, speak to a CPA, speak to someone who is a professional who can give you more tailored advice. These are very generic pieces of information and things that I like to follow for me, but again, every situation is going to be a little bit different, especially depending on your employee situation, or if you have a structured business in a specific way, etc. As all of the legitimate expenses do vary depending on how you are running your card flipping strategy. So just keep note of that. Thanks for checking me out, and we will see you next time.